Okay, let's move on to step 2 because this is where it all starts coming together. And it's also where patience and discipline become your best friends. We've found our zone. Now we have to sit back and wait for the market to come to us at the right price.
And here it is, the golden rule of this whole strategy. We pull out our Fibonacci tool, draw it from the high to the low of that big move, and it divides the price range in two. Now listen closely. We only look for sells when price pulls back into what we call the premium zone. That's the area above the 50% level. The goal is dead simple. Sell high when the price is expensive. Chasing price when it's already low, that's a classic retail trap we're going to avoid.
All right, here we go, the moment of truth. So the price has come back to our high time frame supply zone, and it's trading at a premium. Perfect. But we can't just hit the sell button blindly. No way. We need to drop down to a lower time frame like the 1 minute or 5 minute for our final confirmation that the sellers are really truly stepping back in.
The process here is super precise. Once price is in our big picture zone, we switch to a micro view. And we're not looking for a whole new trend or anything. We're just looking for the very first sign of weakness. And that sign has a name, a change of character. Once we spot that, it reveals our exact entry point.
So, this change of character, or CHOC, is absolutely crucial. Think about it. As the price was pulling back up into our zone, it was making a tiny little uptrend on that lower time frame, right? The change of character is the exact moment that little uptrend breaks. It's our final confirmation that the big money sellers from the higher time frame have returned and are starting to overpower those pullback buyers.
And once you see that change of character, bam, the chart gives you your precise entry point. A new, tiny little order block or fair value gap will have just formed that caused that break. That is exactly where you set your sell limit order. We're talking a sniper-like entry.
So, we've identified the trend, we found our zone, and we've confirmed our entry. But none of that means anything if we don't manage our risk. A perfect setup is totally worthless without disciplined risk management to protect our capital and, of course, lock in those profits.
The rules for risk management are actually really simple. We place our stop loss just above that recent little high that was formed during our entry confirmation. This gives us a really tight, well-defined risk. And for our primary take profit target, we're aiming for that major swing low on the high time frame, the one we identified way back in step 1. This lets us aim for the biggest piece of that next major move down.
This image is for illustrative purposes only. To gain a deeper and more structured understanding, join my community, where you will have access to comprehensive materials and detailed guidance.
And here is the goal. This strategy is all about finding A-plus top-tier setups. That means we should only be taking trades that offer us a bare minimum risk-to-reward ratio of 3 to 1. So for every single dollar we're willing to risk, we should be aiming to make at least 3 back. This right here is how you build a real, profitable edge over the long run.
Okay, let's bring this all home. Trading should be systematic, it should not be emotional. This checklist boils down the entire process into 4 simple confirmations you absolutely must have before you ever even think about clicking that sell button.
And this is your final takeaway. Just ask yourself these 4 questions. 1. Do I have a higher time frame breakup structure? 2. Have I identified that institutional supply zone? 3. Has price come back to the premium zone? And 4. Have I seen that lower time frame change of character? If you can confidently tick all 4 of those boxes, you've got yourself a high-probability smart money setup.
So the real question is, are you ready to stop guessing and start following the footprints? This systematic approach gives you a clear plan to trade alongside the institutions, not get run over by them. The framework is right here. Now it's your turn to go out there and find those footprints on the chart.